Hi, everyone. This is Rob Roy, and welcome to the Elliott Wave Options U.S. Market Update. As we do each and every week, we show you on your screen the stocks that will be featured in this recording. And if there's a particular stock you're interested in, you can go directly to it using the chapters feature in this recording. All right, let's take a look at the market. Well, we talked about this for a number of weeks, this ending diagonal, and we broke out yesterday. We had Microsoft that came out with a fairly decent earnings report, and that broke the market to the downside. We're down here around the 50-day moving average, but as you can clearly see, we've broken out of this ending diagonal. There is a potential ending diagonal where you get one last move to the upside in the C wave, and we thought that could occur around the election, but the pattern has decided that it wants to break out sooner, so we're not going to get that final zigzag, but we had already qualified this pattern, and we've told you about it. We've warned you that this was coming, and so here we are. We hit the 50-day moving average on the low yesterday and then closed just a little bit above it today. We tried to rally, but as you can see, we only moved up to the 10-day moving average today. So we've broken out of this ending diagonal, which means where do we go from here? Well, we did have a relabeling on the wave 5. Notice where this tap box is. The software, which is one of the really cool features of this software, is it reminds you of what you've looked at in the past, so you don't have to keep drawing things every single time you look at it. That's where the top of the tap box was on the wave 5, and we just couldn't break above it. It just acted as a ceiling. We kept bumping our heads against it and then have broken below that lower trend line on that ending diagonal pattern. So all of those, ending diagonal, if you're familiar with Elliott Wave, is a 5-wave pattern that's broken down into 3 subdivisions, 3-wave subdivisions, and that's exactly what we had. We thought we might get one more on a complex wave 5, but it didn't happen. It doesn't have to happen for this pattern to come to fruition. So that's where we exist now. And the question is, do we come back up and test that trend line before moving lower? I was curious about that today, but just hit the 10-day moving average and rolled over. And if Ryan, if you could show that screenshot, I also wanted to show you how great the software is that you can get free Elliott Wave, not just on the daily chart, but intraday. And I like to look at a 3-minute chart intraday. And I do some day trading in my own account. And you can see, based on what you're looking at on your screen, this zigzag pattern to the downside, spot on. This is a 3-minute chart now, spot on with all the Elliott Wave rules that we talk about. And you can take a look at the B wave was right at 50%. So you look for 100% extension, look where the C wave was. And then if you're going to have an extended C wave, you test the previous fib level. So we moved back up, tested it, and then went back to the extended C wave level at 161.8%. That's where the wave 3 ended. And look, boom, that's where we went up and moved into the wave 4, exactly at that 161.8% level. So if you like shorter term stuff, if you like to day trade a bit, I encourage you to get familiar with Elliott Wave. We have a lot of education on it at our website at ewotrader.com, and that's what I'm looking at every single day is a 3-minute chart. So just to show you that here we have the ending diagonal. So we go back to the daily chart, that break to the downside, and the question is, where do we go from here? Well, we would likely come back down at least to 550. I'm going to talk about TradeFinder in a little bit here, but we did have an SPY put as a case study consideration on TradeFinder with the expectation that maybe we come down here to 530 as a possibility. But it seems like that's where we may go. Now, with the election coming up, we might get a little bit of a blip up, perhaps come up to fill this gap. That's where we thought we might get that last little blow off top, which is a characteristic sometimes of a ending diagonal, just for the fact that, not picking who wins, but just for the fact that the uncertainty of the election is over. So we may have a little bit of a blip there as we get past the election and then turn and come back down. I think that would be a great entry to the downside. We may not get that. We'll have to see what happens on Monday and Tuesday, but it feels like we just got to this breakdown a few days earlier than I thought we might, but you have to trust what the pattern shows you, and that's where we went. Now let's take a look at the bond market, TLT. And before we get to talking about the bond market, we did have some economic data that came out today. First of all, we had the jobs report and it was really pathetic. We only added 12,000 new jobs. In fairness, the jobs report does count all the workers on strike at Boeing, and we're going to show a chart of Boeing here in a moment. But it does count that. But even if you take that out, the expectation was for an increase of 100,000 jobs. So even if you take that out, you can see we still missed the number significantly. So the jobs market has cooled a lot. And then we also had the ISM manufacturing number that came out today, and it came out at 46 and a half. Now, just as a quick reminder, 50 is the key level on these reports. Anything above 50 indicates expansion. Anything below 50 indicates contraction. So you can see there's a lot of contraction going on in manufacturing. So it's telling you the economy is weakening. The jobs market is weakening. So as we go back and look to the chart of the TLT, why is the bond market moving down in price and therefore up in rates? What's going on here? It doesn't make sense. You would feel like with the weakening economic data, the Fed would feel free to just cut like crazy on rates. And if the Fed's cutting rates, why aren't prices going up and yields and rates going down? You can see the exact opposite is occurring, and it is really worrisome, and you should be concerned about it. I'm not trying to be a fearmonger here, but you have to take this stuff into account that the bond market is telling you something completely different than the equities market. Although the last couple of days, the equities market seems to be saying, okay, yeah, I think the bond market may have this right. And you can see this downward zigzag pattern here. We had a B wave right around the 38.2% corrective level. That gives you an extension down to 61.8. We hit that. We bounced up. That's the wave, the zigzag rules that I was just telling you about with that intraday chart of the S&P, and then the potential to move lower. So you can see where this is working over multiple securities. If you haven't gone to hub.com, HUBB.com, and gotten a copy of this software yet, what are you waiting on? The Elliott Wave stuff is free. Get a copy of this, and then there is a premium service. If you want to have AI signals, we've AI-ified all this, or the Hub organization has. I haven't. They have. If you're interested in that, so go to hub.com, check it out. You can see how right it has been with all of these patterns, in addition to the big ending diagonal that we've been cautioning you about for several weeks. All right, let's take a look at the dollar now. And as you can see, the dollar is starting to have a little bit of a move to the downside, but nothing significant yet. I don't understand that, other than the fact that with rates up, that is keeping the dollar strong. But if the economy is weakening, all these other things are weakening, why is the dollar staying so strong? It seems to me that there has to be money coming in globally into the dollar, which means that there's concern economically around the globe. It's not just rates. I know part of it is rates, but I don't think it's just rates that's keeping the dollar strong. So something to watch there. We'll see how the dollar hangs in here over the past few days. Let's go to metals. Let's take a look at gold. GLD hanging in there after that move up in the wave 5, and we're still right smack in the middle of this tap box. The wave 5 moved to 90%. Could we go a little bit higher? Could we go to the top of that tap box? This Elliott Wave pattern that's programmed in the software from Hub, exactly how Ralph Nelson Elliott wrote it. Perhaps that would be right around 100% extension. And you would think if the bond market is telling something nefarious could be out there, maybe a black swan event that we're not aware of some kind, then gold should continue higher. I don't think the move is over in gold. I think that we're just consolidating. We had a little bit of a move there to the upside, got a little bit separation from the 10-day moving average. And so we've come back and corrected that. And so I think that's all that's going on. I think gold goes higher from here. Let's take a look at SLV. We had talked about how SLV could play catch up. You guys said, yep, it could. And you guys were right. We did. And so SLV got really vertical. And then we came back down. And now we've consolidated here right at the top of the A-wave impulse. I don't think the move is over in silver either. I think a little bit of the tech wreck over the past couple of days has played into SLV. You know, it's kind of getting tied into the tech side of things more than just the metals side due to the fact that there's so much silver in technology these days. But I feel like we're likely to hold this, but we'll have to watch that. If we hold this impulse high and turn and go back to the upside, the algorithm still has the wave 3 labeled as active. The fact that it's a different color, it colors it purple when the waves are confirmed to be complete, and it stays green if it's still active. So perhaps we're just having a little bit of a throw the baby out with the bathwater here with SLV, with what's going on in the tech sector over the past couple of days. That was started, as I said, by Microsoft. So we'll watch and see. I think that's a point of interest here if you're looking for potential entries. Maybe taking a flyer on silver, going back to the upside, could be something to take a look at. Let's get into the crypto world. And Bitcoin has been hanging in there right around the 70,000 mark. We're right here at the A wave impulse high. We went up, got a little bit above the 10-day moving average. So we've come back and are testing that area now, as well as that A wave impulse. The election is going to have an effect on what goes on with the crypto world. And just as a note, we're going to have a crypto expert on next week. He's going to be a special guest here on the U.S. market update. So make sure that if you're a crypto fan, that you tune in next week, watch the recording. And if you have any friends that are into the crypto world, this guy knows his stuff. He knows all the back end stories. So he's going to be a special guest and let us know how the election results are going to affect the crypto world. So make sure you tune in next week. Now we take a look at Ethereum. We've talked about that, how it needs to hold in around 2,500. And what I was talking about earlier politically is one of the parties is far more favorable to Bitcoin and cryptos than the other party. And, we may see some volatility around that. So, again, you want to make sure and tune in next week. We have a bit of an ascending triangle forming here. We need to have Ethereum hold here and bounce back up. And if it can turn and bounce back up, that would be a golden ascending triangle. One of the biggest mistakes that I made in my early days of trading these triangles was wanting it to be too perfect, wanting it to get right into the point. They don't always do that. We've had a long time here of the same highs and higher lows. It's a pretty good ascending triangle. It doesn't have to come back up again to have a breakout, and it is going to break out on election night. I don't know which way, but we're going to have a move here in the next few days on Ethereum. And then the Solana, I know you guys have been talking about that quite a bit. And that had to move up right up to the 180 level, right where resistance was, exactly where we showed you that it could likely go last week in this very U.S. market update. And it's right where we hit in the wave 3. And the wave 3 is still active based on the fact that it's green. But we're pulling back a little bit. We had a pretty nice run there. And we're just doing a little bit of backing and filling here, I think. But everything crypto is on hold to see what happens on the election night, as far as we get a pullback and then maybe a move higher later, or if we get a quick move to the upside on election night, depending once again on who the winner is. Now let's take a look at UNG. If we look at natural gas, one thing to note here is notice the Elliott Wave pattern's gone. So there's been a relabeling here. That wave 5 pattern is gone. We've been looking for a trade, and it just feels like UNG has just been one of those that has just been giving you the psych every now and then. Every time it looks like there's a trade, like when we held here at 12.5 and moved up, I wanted to see it break above 16. That's why we had this line here. And if it could break above that, we could go long, and it just hit it and went back down. And then we come down to 12.5. Okay, well, if we break that, we can go short, and then it bounces up to the 50-day moving average. Now it looks like maybe it's starting to give us a move here. Now, even though the 5-wave pattern is done, check this out. When we look at a zigzag pattern here, which has clearly formed on UNG, we go right up here, and we're right at the 38.2% fib level, which would bring us down to 12.5. That's the 61.8% level. Well, we're there. So we've already fulfilled the zigzag pattern. But the trade could be if we have an extended C wave. So if that C wave goes down to the 100% extension, we'll keep an eye on that. That could be a trade finally on UNG. It hasn't wanted to give us one to the upside or the downside, but maybe we have one setting up. And I just want to be clear. The zigzag pattern has done what it's supposed to do going to this point here, but maybe we go a bit lower. We'll see from there. And then looking at oil, USO, if we take a look at that, we had the breakdown, which made no sense to me, on the fact that Israelis' response to Iran didn't really affect any of the oil production in Iran. And so we had this big drop. That made no sense. Talked about that. And here we are right back up to that level. So that makes a lot more sense. It just didn't make any common sense. I don't know why we had this big drop down, but there was the news that when Israel responded, it didn't disrupt any of Iran's oil production. And so here we are right back to that point. Now we have to wait and see if we can get back up here. If we can get back within this triangle, that means that was a false breakout. And that can get into all these rules. I'll talk more about that another time. But if we can get back into this triangle, then perhaps we have a breakout attempt. But right now, that's a false breakout. And we'll see if we're just testing that move or if we can get back within the confines of an ascending triangle. So oil remains very difficult. USO has been challenging for a while, but we'll see what happens over the next couple of trading days as we go through there. And now let's get into some stocks of interest. We talk about Netflix. And if we get there, you can see that looking at Netflix, we have this movement here. We're forming a little bit of a triangle. Look how good this zigzag was to the upside here. So I'm just showing you pattern after pattern on how well this works. So if you're not following Elliott Wave and all this kind of stuff, I know there's still Elliott Wave haters out there. My take is always that people that say negative things about Elliott Wave have not taken enough time to learn it. It is complex. There's a lot to it. It's not simple, but I'm a believer that nothing in life worth having comes easy. And so you have to put the time and effort into it. If it was that easy, everyone would do it, and then it wouldn't work. But you can see we formed a little bit of a symmetrical triangle right on top of the C wave extension. We had the 38.2% B wave correction, which brought us to a 61.8% extension. And now we have this little bit of a triangle. Are we going to break out to that triangle, move to the 100% extension? I think that if the economy continues to weaken and we start talking more about the staycations, et cetera, remember how well Netflix did back in the pandemic when everybody was at home? I think that's an interesting case there for Netflix. Now let's take a look at Boeing. Boeing is quite interesting. When we look at Boeing, that was our case study consideration last week in TradeFinder. And by the way, if you haven't attended a TradeFinder before, you can do so by clicking on the link that you see, putting the link in your screen and register there. It's free. We do it every Tuesday at 1 p.m. Eastern Time. It's live during market hours. We talk about the markets. We look for trade ideas, and we have a live Q&A at the end. It's a great community. Love to have you come and join TradeFinder this coming week. So we talked about how Boeing could move back to the upside here, and it hasn't yet, but this was kind of one of those flyer type trades, and it's on the fact that they had earnings report, which I said during TradeFinder was going to be bad, and it didn't crash. And at some point in time, that strike's going to end. And when the strike ends, I think you could have a tradable bounce, and that's all we're looking for there. That's the kind of stuff that we talk about during TradeFinder, is the potential for a little bit of a tradable bounce here to the upside. So we'll see how that plays out. And then continuing on stocks of interest, and a lot of you have been talking about China. So let's look at the FXI. And by the way, when you make your comments underneath this video, if you haven't tuned in before, every single month this year, we're giving away one of our free level 3 subscriptions. As you can see on your screen, it's a time strategy. That's stocks that have a big drop and then it goes sideways. It's an income-based strategy, calendar spreads, butterflies, etc. Just designed to generate income off a sideways move. Then we have the volatility strategy, which is breakouts of triangles, which we've already talked about a bit in this recording. And then the AI-based impulse strategy, which is really exciting. We've been sending out alerts to our alert subscribers at ewotrader.com since September of 23. We've yet to have a losing month. I'm not saying that we're never going to, but we haven't yet on closed alerts in the AI impulse. And we're giving away one of those for free. It's worth thousands of dollars each and every month. And all you have to do to register is leave a comment. leave a comment, say whatever you want under this recording. But part of my motivation for doing this is to create a community of traders that talk. And we don't have to all agree. Let's just chat back and forth. And the fact that not everyone agrees is what makes markets. One person has to be bullish and another bearish to create a trade. So let's have a good, respectful conversation here. And if you disagree, that's fine. But leave a comment here, be part of this community. Let's grow this channel. So hit subscribe if you haven't already. Tell your friends. Let's just make this a good interactive place where people can voice opinions on what's going on in the market, and then hopefully get some education as well. When we look at the FXI, you can see that we had that big move up, and we had David Tepper came out, who's one of the guys that I look at, said he's buying all things China. So it gets my attention when someone of that pedigree comes out. There's very few people. I usually keep the financial networks on mute. I've talked about that before. But there's a couple people that when they come on, I'll turn the volume on. He's one of them, and he's pretty bullish on China. But there's mixed opinions out there on the financial networks. We had this big run up, and then we consolidated. We're creating a symmetrical triangle here. We've gone sideways. I think you could kind of take a little bit of a flyer here on China. Some of you like to see QQQ, but I'm an options trader. I like to trade options, and so the options open interest is much higher on the FXI, and the charts are almost similar. So I think you could interchange these two. K-Web's another one if you wanted to look at, but perhaps now might be an opportunity to take a flyer on something China-based, especially when things are getting a little squirrely here in the U.S. equities market. Look at the wave 4 right at 55%, so we could perhaps move up to that wave 5, continue higher from there. And then looking at SMCI, holy cow, to finish off this week. If you're looking for a flyer, back in the days when I used to do live seminars, everything changes. We're all webinar based now, but when I would do live seminars in the past, the phrase that was common was counting irregularities, and that's what's gone on with Supermicro. They are not good right in front of an earnings report that your accountant firm resigns. That's not a good thing. And you can see post-split, we've had this big move down. And then, well, this accounting stuff news is coming out, and you've had a huge move to the downside. But see how vertical that is? How low can it go? I mean, they are making money. They're in the AI space. They're a major player in there. Now, maybe they are overstating their earnings. Who knows? I don't know anything about that. But when I look at the charts, I'm saying that this is a company that is real and makes money, even if they're going to have to deal with some accounting stuff at some point in time. You get oversold, and we might be getting to that point here on Supermicro. So I think maybe if you have speculative money laying around, you might want to take a look at something there. And I just want to be clear, I'm not talking about a turn and move back up to the heyday. I'm just talking about a tradable bounce here. You can see we've had a vertical move down. We've had gaps. We're below the 10-day moving average. All those rules you hear me talk about week in and week out are all violated here. So we could have potentially a little bit of a bounce back up towards the 10-day moving average. Thanks as always for watching. Get out and vote, and we'll see what the election results have for the markets, and I'll be back to tell you about it next week. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.